Welcome back. I'm Pratap here. Today is 17th March 2024. In this video, let us identify support and resistance for Bank Nifty with the help of NeoStock software supply demand zone chain. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available in a playlist supply demand zone price action course at our NeoStock YouTube channel. Even I am providing the link to this playlist in this YouTube video description. If you click the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in the channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide the update in the channel. Now let's get into Bank Nifty's support and resistance with the help of NeoStock supply demand zone chain. So let's start with monthly time frame. So for Nifty Bank, that is Bank Nifty, I am generating monthly zones going to the monthly time frame. I am generating supply demand zone chain. Now it is processing. Yeah. So this is the most recent demand zone. Already had one rejection from this zone. And legging is on 1st August 2023, we have 3 base candles. So this is the legging, 1st August 23, we have a base candle. After that, there are 2 more base candles. Even though they are part of medium size candle, once you have a base candle, you can consider them as part of the zone. So this is the way you can draw the zone. And if you look into Bank Nifty is having a monthly EMA confluence. If prices get into this EMA level, the overextension will be completed, monthly overextension. Already earlier there was a overextension. Now it is on the way to completing the overextension. In between some movement. So by the time prices reaches near to this EMA 20, monthly EMA 20, overextension will be completed. Probably this is the time, by the time overextension completes, swing traders will get very good long opportunities. Okay, this is monthly time frame. Now let us shift to weekly time frame. And one more point. This is this monthly zone is an all-time high monthly demand zone. Now I am going to weekly. So let us generate weekly chain. I am changing the time frame to weekly. Let us generate the supply demand zone chain. Okay, the chain is generated, and at present at weekly time frame, Bank Nifty is having one supply zone and also one high liquidity demand zone. This is the important thing you should observe. First, let us draw the supply zone. It is already tested 2 times and 2 times it is given rejections. That means a very strong order flow is there in the weekly supply zone. So when is the leg-in? 26th December. And after that 2 base candles. This is the 26th December. We have 2 base candles and then we have a drop candle and follow through candle. So let us draw the zone, weekly zone. This is a rally base drop. So in rally base drop, the highest of leg in or base candles or leg out candle should be considered as a distal line. So I'm changing the color to weekly supply zone. Okay, what about weekly demand zone? This is a high liquidity demand zone, already tested once. And when this zone is created on 30 October 2023, after the 3 base candles, 30/10/2023. So this is a 30/10/2023 after the 3 base candles, and then we have a leg out candle. So this is the weekly zone. So let me change the color to the weekly demand zone. And if you look into this weekly demand zone is having zone confluence with the monthly demand zone. And moreover, monthly demand zone is having a EMA confluence. See here? Now this weekly zone is also getting monthly EMA confluence. Already monthly zone is having. The fine-tuned area inside the weekly zone is also having a monthly EMA confluence. When the prices reach very near to this, it gets the zone confluence. This is one point. Another important point is this weekly zone is a high liquidity zone. And see here, previously prices just entered into the weekly demand zone, and then it changed the direction, started moving up, and finally entered inside the weekly zone. And from the weekly zone, again prices are moving down. Now prices reached weekly EMA, but at the time we need not worry about weekly EMA. The reason is there is no overextension. So this weekly EMA was moving in a narrow range. So that means it is a sideways, probably it looks like the movement. So at the time there won't be having any overextension. So you need not consider this as a completion of the overextension. You can ignore it, ignore this. But monthly makes sense. Okay, this is about weekly. Now let's move on to the daily. So let's go back. I'm changing weekly time frame to daily. Let me generate the chain, supply demand zone chain. It is taking a little more time. The reason is at present my laptop is running on the batteries. Okay. Now the chain is generated. Here we have a high liquidity supply zones. 2 high liquidity supply zones are there. The nearest supply zones are not high liquidity, but let us identify these high liquidity because they help us to identify the support and resistance. Already weekly zone is a high liquidity zone. First let us draw these 2 high liquidity supply zones. After that we will draw the nearest supply zone. So what is this high liquidity supply zone? Already it is tested 3 times. So 27/12/23 after that 3 base candles. Let's go to daily time frame. So 27/12/23 3 base candles. This is the 27 December. These 3 base candles and a drop candle. Here we have a high liquidity zone. High liquidity daily supply zone. See recently what happened on last Wednesday, 1, 2, 3, 4, 5, 6, 7, not last Wednesday, that is 6th March. Prices entered and then Nifty was the whole week almost it was down completely. Every day it has given negative return. See here the close, with compared to this close, next day's close is low, next day's close is low, next day's close is low, even next day's close is low. The entire week during last 1, 2, 3, 4, 5, 6 trading sessions. That is after it reached into the zone. So it's a very good short trade, the high liquidity zone. So swing traders would have got a very good profit during the last week. I mean, that is on 6th, whoever took the trade. And apart from this, there is one more high liquidity zone. That is a 15-1-2024. So this is the one. This is the zone confluence. Within a high liquidity zone, we have another high liquidity zone. And one thing we forgot to label. Labeling is very important, because once we get into the lower time frames, we get a lot of confusion, which zone, which time frame it belongs. That's why what I do, let me quickly label, starting from monthly. So this is the monthly zone. Monthly demand zone. Now I'll move to weekly time frame, and here we have weekly demand zone. We have monthly, weekly, and we have this weekly demand zone is a weekly high liquidity demand zone. That point we have to clearly mention, because this is the area will act as a strong support. Weekly high liquidity demand zone. And then we have weekly supply zone. Okay, inside the weekly supply zone, we have daily supply zones, high liquidity supply zones, changing to daily. So this is a daily HLQ supply zone. Inside daily HLQ supply zone, we have another daily HLQ, LOTL. We have daily LOTL, HLQ supply zone. This is the level on the top of the level. Here the beauty is both these zones are high liquidity zones. But this is a counter trend trade setup related zone. So I picked up the orders from here, and this entire thing is daily high liquidity. Then what about demand zones? But we have nearest supply zone is also there here. And there are two more supply zones are created, and here, see, look into this. This supply zone is having a strong rejections. Maybe this is also an interested area. Even this supply zone has given a rejection. Let us draw all the four daily supply zones. So when is the next one? On 4/1/2024, 8/1/2024. 4/1. So that is inside this zone only. So we need not worry. See, rally base. This is what happens. High liquidity zones, new zones will be created again and again. Maybe as a LOTL or in the lower time frames. So we need not draw this. It is part of this zone. So what is the most recent one? This is the 6/3/2024, 11/3/2024. This is the one, rally base 6/3. Again a zone is created within this zone. That means entire area, if you draw a zone, only entry is changing, But finally they are going and picking the orders from here only. So that is the reason why let us keep this high liquidity as a reference. Maybe sometimes it may pick up the orders. See, it already picked up the orders. Rally, base, rally. The next candle went and picked up the orders. See the rejection. So here also strong order flow is there. Okay, let us draw what's wrong. This is a daily supply zone, not high liquidity. But this daily supply zone is picked up the orders from the high liquidity zones. So this entire thing is LOTL. So what really it is indicating? Indicating now supply is dominating. Each time prices are going, new supplies or institutions are creating. So lot of supply is building up here. Even if demand is strong, next time the supply will hold the demand. It will not let the demand break these levels easily. This is what we need to observe. That means in this area, going to get, that means in this entire weekly supply zone, lot of demand is built up here. So this is one point you have to observe. Everything happened inside these weekly supply zones. Okay, what about demand zones? These are all supply zones. We have a most recently created demand zone. Let us draw the daily demand zone. It is already tested, moreover. When on first, it was created on 1st March, 28th February, one base candle, leg out is on 1st March, 28th February. This is the one, drop base rally. But this is not a high liquidity demand zone. This is a daily demand zone. You may ask a question, why we are drawing? Because we need to focus more on high liquidity zones. Inside we have a high liquidity demand zone. Why we are focusing? You may ask a question. Yes, we need to focus. The reason is, if this demand zone is violated, Bank Nifty daily trend will be changed to sideways trend. So that way it plays the major role. Currently, what is the daily trend? Oh, already daily trend is sideways. If this demand zone is violated, then daily trend will be changed to the downtrend. Always keep an eye on these parameters for each time frame. The HTF trend, ITF trend and LTF trend. LTF means your entry time frame, because currently this is a daily time frame. See here, daily supply demand zone chain. Because the current time frame is daily, LTF means the daily trend is sideways. Currently Nifty's trend is sideways. This sideways will be changed to downtrend if this demand zone is violated, which is very dangerous. So that's why we should be very careful. But this daily demand zone, how strong it is, we never know. Once we go to lower time frames, if there are any high liquidity zones in the lower time frame, probably they will hold for some time. So that we will understand once we get into that. So this is the demand zone. And also see the zone violation is violated opposing pivot. Pivot's violated, but it is not yet violated opposing zone. VOZ is very strong, but VOP is not strong compared to VOZ. Always it is recommended to select the zones VOZ, zones having VOZ, violated opposing zone. But below this we have a high liquidity demand zone and having zone violation as VOZ. And it is a leg out, strength is a leg out with gap. So we have good positive indicators and it is not yet tested. Let us draw even this zone. This is a high liquidity demand zone when it is created on 17th, 11th, but it is having 6 base candles. 17/11/2023. Here, This is 17th 11th. Don't think this is a base candle. It is a drop candle. It is having hidden body. Drop candle, after that base candle. 1, 2, 3, 4, 5, 6. All these base candles. And where is this? Inside weekly high liquidity zone. First of all, this is a high liquidity zone, weekly zone. Inside we have a daily high liquidity zone. That is amazing, excellent. So this is the daily demand zone. Daily high liquidity demand zone. Let me add the text. So here we have a normal demand zone, daily demand zone. This is a high liquidity demand zone. So our next week market is very interesting. Is this demand zone is going to hold, or is it going to be violated? Based on that, market dynamics will change completely. If Bank Nifty daily becomes a downtrend, many equations will change. So let us see. But once we get into lower time frames, we will get clarity whether there are any high liquidity zones inside this area at lower time frame. But at present, this is excellent. This is an amazing zone, especially for swing traders. Once prices enter into this area, this is a good area. But lower time frames, how these zones, that is also we need to calculate. Because always we need to fine tune the zone. But at this point of time, this is impressive. Because the daily is inside weekly, weekly is inside monthly. But this is not good enough. While fine tuning, if this zone is having order flows, then only we consider this is a good zone. Otherwise, we know when a zone will be violated. Okay, now daily analysis, up to daily analysis is completed. Now let's move on to 125 minutes time frame. So I'm going back, changing the time frame to 125 minutes and generating the chain. Maybe we need to wait few seconds until software displays the results, because it is analyzing the data for a longer data. Okay, fine. We got the data. Here we have a immediate high liquidity demand zone already tested once, the fourth one. Where this demand zone is created? First, let us identify this demand zone. This is on 25th January, 9:15, one base candle. 25th January, 9:15 candle. So I have to change the time frame to 125 minutes. Twenty-fourth. So this is the one, 25th January 9:15, and this is exactly having a zone confluence with the daily demand zone, daily high liquidity demand zone, drop base rally. Is it? No, I am doubtful. It is not having zone confluence with the daily. But anyway, first let me draw this zone. This is 125 minutes. This is having confluence with weekly zone. Daily is little below this. If this 125 minute zone is violated, then only prices will enter into daily high liquidity zone. See how institutions are keeping the order flows. But this is already tested once. It doesn't matter. It is a high liquidity zone. High liquidity zone should support multiple trades. See how the zone is created. Drop, base, again rally candle. LOTL. So institutions are keeping this area is very strong. They are not letting the prices to come up to the daily demand zone, high liquidity demand zone. So let me add the text. So this is a 125 minute high liquidity zone. Okay, we have 125 minutes high liquidity zone, fine. Next, what else we have? We have a high liquidity supply zones. Two supply zones are there. Let us draw both these high liquidity supply zones. First one is 16 January 9:15, two base candles. 16th January 9:15. Yeah, this is the one. 16th January 9:15. How many base candles? Two base candles. This is LOTL HLQ zone. We have a high liquidity zone. So that means the entire zone, this entire daily zone is also same as a 125 minutes high liquidity zone. So instead of drawing, let me change the text. Comma 125 minutes HLQ supply zone. This is the one. So it supports both daily as well as 125 minutes. So this is one high liquidity. There is one more high liquidity supply zone. This is a counter trend trade setup. When it is created on 7th March 9:15, two base candles. $9.15. This is the one. We have a drop, two base candles, and a drop. So let us draw. So this is the one, but this is already picked up the orders. But anyway, this is a high liquidity zone, supports multitasking. This is 125 min. 125 minutes high liquidity supply zone. So that means here we get a resistance in this area at 125 minutes level. Maybe there may be 15 minute zones below this. They will also hold the prices during next week. But at this point of time, here we have a resistance we identified. So far in this daily demand zone, we haven't seen any zones, high liquidity zones. And we have a normal supply zone, 75 minutes, immediately available supply zone. Let us look into this. This is a 14.3, 9:15, one base candle. So we have a rally based drop. This is the one. This is inside a daily supply zone, but we don't know how strong it is going to be. This is a normal supply zone. Because this is the immediate one, let us draw for reference purpose. Later on, we may find inside some high liquidity, 5 minutes or 15 minutes. So for that reference, it will helpful. Because inside a zone, if you have high liquidity zone, higher time frame zone, if you have lower time frame zone, then this is a good area. For finding our support and resistance, it will be helpful. That's why I am marking this. This is the immediate supply zone. Then what is the immediate demand zone? The immediate 125 minutes demand zone is a high liquidity demand zone. We have a leg out with follow through. We have a violated opposing zone. Good. And drop base rally. When this is on 25th, 9:15, 25th January 9:15. Oh, we have already drawn this, right? Okay, we have already drawn this. In case if this is violated, what is the next level? This is another high liquidity demand zone. This is on 26/10/9:15. 2610 means somewhere here. This is the 23rd. Sorry, this is 11. We have 2610. So this is the one, 2610 915, and two base candles, 2910 915 is the leg out. This is the one with the hidden gap. So that means till here we don't have 125 minutes high liquidity demand zones. This is 125 minutes high liquidity demand zone. Okay. Next, after this, let us go to 75 minutes time frame. Changing the time frame to 75 minutes. So generating the supply demand zone chain for 75 minutes time frame. Okay, here we have immediate supply zone. Immediate demand zone is again high liquidity demand zone. 14/2, 14th February 11:45. So let me change the time frame to 75. The same thing, 14th February. This is January, I'm sorry. This is 12th February. This is 14th February, 9:15. Is it 9:15? 11:45. This is the one, 14th February, 11:45. Oh, excellent. Very interesting. Why I will tell you why it is interesting. First, let me add the text. This is 75 min high liquidity demand zone. So let me cross check once again. 14th February 11:15 and 14th February 14:15 is leg out. This is 14:15. The reason why I am saying it is very interesting, see the recently created daily demand zone, it picked up the orders from this 75 minutes high liquidity demand zone and a daily zone is created. So that means the real order flow is there in this area. See, already it picked up the orders earlier. See the rejection here. A high liquidity zone is created, picked up the orders and the rejection and then further moved up. Again what institutions did? Again they created a zone here. But this time they created a daily zone, but the orders are picked up from this 75 minutes high liquidity demand zone area. So that means definitely in this area or maybe inside daily demand zone, it will hold the prices. Any further lower time frame, high liquidity zones are there inside, we will find. So very interesting. This daily demand zone, the source is 75 minutes high liquidity demand zone. Okay, any more high liquidity 75 minutes demand zone? The next one. We have one more high liquidity demand zone, that is the 12th one. This is on 29th, 11th, 10:30, two base candle. Is this the area? This is 29.11. Sorry. So here 29.11, 10:30. Here they picked up the orders. This is the demand zone. 29.11, 2 base candle, 29.11, 14.15. 29 November, 14.15. So this is the zone. This is 75 minutes high liquidity demand zone. See the structure, it looks not really good here, right? Many candles, they were inside this. Maybe there could be a lower time frame high liquidity demand zone that probably holding the prices. The 75 minute structure is not good, but maybe holding. And inside the daily we have a drop base rally is there, follow through candles are there. Just to check whether what is the quality of this zone. So we have drop base rally, we have 75 minute zone is there in this area. Okay, now let us look into the supply zones. We have a high liquidity supply zone already tested 3 times. When it is created, 28.12, 9.15, 4 base candles. $28.12, 9.15. So this is the one, 28.12. But this is this is the one, because there is a hidden body. If you add the hidden body, this is a leg candle. We have these base candles. So what we can do, this is a ERC candle. You can add a 75 minute supply zone. This is 75 minutes high liquidity supply zone. Okay. Previously, did I add 75 minutes? Yes, 75 minutes high liquidity demand zone. So this is the main source where every time orders are picked up from these zones. This time, just before entering, it came down with this LOTL zone creation. So this is one high liquidity zone. This is the main source for all these price pushing down. Push it towards the down. And then there is one more high liquidity supply zone, already tested 6 times and 12 rejections from this zone. This is a leg out with high explosive, violated opposing zone. When it is happened on 29.12, 4 base candles. 29.12, 14.15. This is the one, rally, base, drop, here again. 1, 2, 3, 4 base candles. Anyway, this is once again, one more high liquidity zone is created within this. That means LOTL zones. This 75 minutes high liquidity supply zone, Again another 75 minutes high liquidity supply zone. So that means this entire daily zone institutions are filling up with high liquidity orders. Now this entire area, now again below there is again another high liquidity. See how they are filling this entire area with orders. That means it is an indication that there is a strong order flow is added in this area. Keep on adding the orders. So it's a very dangerous zone for buyers. Definitely we need to exit. Until this zone is violated, we should be very careful. This is 75 minutes high liquidity supply zone. The interesting point you have to observe, all this is a LOTL again. This 75 minutes high liquidity is a LOTL supply zone within the daily area. All these things happening within this daily area. This daily is also high liquidity zone. This daily zone is also a high liquidity zone. Okay, all this. But what is the most recent supply zone? The 7th one. This is for the reference purpose we will draw. That is 14/3/2024. Is it 10:30? (14/3/2024) at 1 o'clock. This is the one. Just below the 125 minute supply zone, they added this. Like this. So this is a normal supply zone, just for reference purpose I am drawing. And below 75 minutes we will look only high liquidity zones only. This is 75 minutes supply zone, normal supply zone. But this is not having a zone achievement as a VOZ, it is only VOP. This is not at all having, this is a 12/3/10:30. But this is P also, right? Twelve, 3, 10:30, 4 base candles, okay. Twelve, 3, 10:30, drop these 4 base candles and drop. All these are all supplies, 75 minute supplies. Inside 125 minutes high liquidity zone, there is a supply zone. We have a drop, 3 base candles and drop. When is it? 7th March, 10:30. But this is 6th March, 14:15. So 1, 2, 3, 4, 5, all these things base candles. Because software is very strict, it can't compromise like the way how we are compromising. I can consider this as a leg-in, 3 base candles and drop. But software consider this as a leg-in and 1, 2, 3, 4, 5. Because all these are all medium size leg candles, it considered. Yes, it is correct, medium size leg candles. But we compromise and drop. We may consider this is a little above the medium size candle. But computer exactly calculates the values. So it is qualified, all these candles qualified as medium size candles. That way this entire thing is a 75 minute zone. Okay, anyway, here we have a 125 minutes high liquidity zone. So now we have finished drawing high liquidity supply zones and nearest demand and supply zones. Nearest demand zone is a high liquidity zone. Now let us move on to the next time frame, 25 minutes time frame. And let us generate the chain. So this is the 25 minutes demand and supply zone chain. And from now onwards, we focus only high liquidity zones. We don't give much importance to the other zones. So the nearest high liquidity supply zone is 6th one. It is already tested 2 times and 2 rejections came from this zone. That means last week it provided trading opportunities already. On 13th March it was created. 13th March, 10 o'clock 5 minutes. 25 minutes time frame. March, this is 14th March. So this is the leg candle and these 2 are base candles and a drop candle. So total how many? 2 base candles. 11:30 candle is a drop candle. Yeah. So this is a high liquidity, but if you observe carefully, this 125 minute supply zone is picked up the orders from this high liquidity zone. This is a normal supply zone. But this normal supply zone is picked up the orders from the high liquidity supply zone and created its zone. That's why this is the most important thing. And this is a 25 minutes high liquidity supply zone. So this is the one where we need to, because we don't really now care about these supply zones, but anyway, if required or not, I will decide after completing the 5 minute zones. But time being, this is 25 minutes high liquidity supply zone is a source for this 125 minutes supply zone, which is the nearest zone at this point of time for the current prices. But actually the origin for creating this zone, 125 minute supply zone, is 25 minutes high liquidity supply zone. This is the one you have to understand. And last week it picked up the orders from here. It not only created 125 minute supply zone, it gave a very good return up to here. The daily demand zone. Finally, daily demand zone holded the prices. Definitely here, there will be some 5 minute zone is there. Week to week, if you draw a zone, definitely lower time frame, maybe 15 minutes or 5 minutes, you can find a zone here. From there, it is picking the orders. That we will understand once we get into the 5 minutes time frame or 15 minutes time frame. But for the time being, this is a high liquidity supply zone currently we are using. This is the nearest high liquidity supply zone for the 25 minutes time frame. And above we have a 25 minutes low priority high liquidity zone. Sometimes they will also work, but time being I am ignoring. What you can do, you can draw these zones in your charts, the 5th one. The second one also you can draw in the charts. See, already it gives 7 rejections. And this is the high liquidity supply zone, resistance supply zone, already tested 3 times and 5 rejections. And when it is created on 5th January 9:40 candle. After that, one base candle, 5th January 9:40. So where is 5th January? 15th January, 4th January, so somewhere here. This is 5th January, 940 candle. This is the one. And one base candle and a drop candle. So we have a rally base drop. See, already it picked up the orders from this zone and see the push. Excellent. And where is this 25-minute zone? Inside 75 minutes high liquidity supply zone. This is 25 minutes high liquidity supply zone. It picked up the orders and again pushed the prices down. And once again it picked up the orders here. See here. When it is on 16th January and again pushed the prices down. And after that prices closed very near to that, this 25 minutes. But they didn't reach. The reason is institutions created again another LOTL high liquidity daily zone. So from that daily zone, it picked up the orders. Probably here there is any high liquidity zone, we need to check. Lower time frame or maybe lower time frame. Normal zone also is okay inside high liquidity zone. That is how we trade with the help of high liquidity zones. Okay, next one is a low priority high liquidity zone, but it is already gave 7 rejections. That made me get some interest on this. Let us see when it is created. This is on 16/1/1235. Is this the one? Yeah, this is the area. See here. This is the one. 1235. 16/1/1235. After that 6 base candles. This 25-minute zone is from here. 1, 2, 3, 4, 5, 6 base candles. This is the 25 minutes. Low priority high liquidities supply zone. From this area, it would have picked up. See here, it picked up the orders here. Exactly in this area, it picked out because many candles are in this area. The rejections, institutions are trying to break this supply, but they couldn't. And finally, prices came down. Now institutions started providing more supply. That's when new zones are created after this. After this, this entire fall. All this entire fall is happening this from this 25 minutes low priority high liquidity zone. It is high liquidity zone, but within the high liquidity, I have given low priority to these zones. The TCO and the TCZ. But this entire area is a daily high liquidity zone. So this is the move. When prices entered here on 6th, if anybody would have took a short order, swing traders, you would have got this entire move from here to here. Okay, fine. This is about 25 minutes zones. Anything else? So we have seen demand zones and supply zones in 25 minutes time frame. Have you looked into the demand zones? (25 minutes demand zones? No. Okay, we looked into only supply zones. Now let us see the demand zones. So what is the nearest high liquidity? The 12th. 12th is the nearest high liquidity. Remaining I am not really focusing, because from 25, 15 and 5 minutes we will focus only high liquidity zones. But what you can do from this list, if rejections are there, more rejections, focus on those demand zones. Maybe they could be a good area. They can be almost equivalent to high liquidity zones. Almost equivalent to, I am saying, not high liquidity zones. Because order flow is there, then only you get such a huge rejections. I mean more rejections. Okay, the high liquidity zone is a fresh zone when it is created on, this is having violated opposing zone, leg out with high explosive. This is on 2911. 2911, 940 after the 3 base candles. 2911. $29.11 means here, right? Yeah, this is the area. 29.11, 940. Even below 29, 915, 940. So this is the leg candle and 3 base candles. Yeah, 3 base candles, 29.11, 11.20. This is the one, 11.20. So this is a nearest high liquidity 25 minute zone. So let us draw this zone. This is a 25 minutes. High liquidity demand zone. This is just below the 75 minutes high liquidity demand zone. See, generally, you know what happens? They will act as a traps, bull traps or bear traps. That is the way institutions generally set up. But anyway, price is not here. But one day what happens? This zone will be violated. Immediately from the below zone, it will pick up the orders and it will go up. What we do, because our stop loss is, it hit the stop loss, we will exit from our trades and we will be out of the trades. But institutions will pick up all our shots, because this is you would have taken a long trade here. The moment it hit your distal line, what do you do? To cover up your longs, you will go for a short trade and you will exit from the trades. All these shorts means bears. Whoever is exited from the long trades, they are the bears. Now what institutions are doing? They are buying. That means they are trapping the bears. That's why we named it as bear trap. Anyway, we will have detailed discussion on these topics in our training course once we get into the third phase of the training. So just below this, but remember, all these are all inside weekly zone. This entire thing is monthly, this entire thing is weekly. Inside weekly, institutions created so many high liquidity zones at different time frames. Okay, any more zones? There are no more, but one any demand zone having more rejections. 10th one. So I'm giving you the exercise. Draw this 10th one. This is at 14.2, 12.10. So here you are getting this 125 minute zone. This is a 125 minutes supply zone. The reason why this 125 minutes supply zone got the importance, because it is created in 125 minutes high liquidity demand zone. That's why it got the importance. If it is individual, not part of this high liquidity zone, it could be like a normal zone only. The 125 minutes zone is the main reason behind holding this supply by making use of this 25 minutes demand zone. Sorry, I have typed 125. For this reason, for this 25 minute zone holding the prices is because of this 125 minutes high liquidity demand zone. This is a normal demand zone. I wrote supply zone. Making mistakes. Sorry. (25 minutes demand zone). Okay. So now let's change the time frame to 15 minutes. They are more important for us, 15 minutes and 5 minutes, because Monday and Tuesday's trade setups, they will be helping us. So I'm going back, changing the time frame to 15 minutes, generating the chain. It's taking time. Okay. So let's start with the demand zones. The immediately available high liquidity demand zones are at 9 and 10. And 9th one is already 3 times it supported, tested. 10th one is already 1, but 4 rejections from this zone. Strong order flow in these areas. Just below that we have 2 low priority high liquidity zones. That means institutions kept some strong demand also. That means the demand and supply equally, their institutions are trying to place at different. Probably if that is the case, prices will be moving in a narrow range, probably during next week, if I am not wrong. Because earlier we analyzed the Nifty video, also it was similar. Okay, anyway, first we will draw these zones, nearest high liquidity zones, but this demand zone is also interesting. Even though it is normal, it is already 2 tests and 3 rejections from this zone. So let me keep an eye on this also. 15.3, 11.45. So let me change it to 15 minutes. 15th March, 11.45. Is anything created here? Yeah, 15th March, 11.45. Institutions kept a zone, 15 minutes demand zone, normal demand zone. But why we are showing interest? It is holding the prices. Why it is holding the prices? Because it is at the daily demand zone. Probably you may find a 5 minute zone here. That could be the basis. Maybe 5 minutes high liquidity zone we will check. Once we get into 5 minutes, we will get. Time being we have a reference, 15 minute zone we have written. And now high liquidity zones. The first high liquidity zone is on 14th February, 13:15 candle. 14th February, 13:15 candle. After that, 3 base candles. So inside this we have. This is the 13:15 candle. After that we have only 2 base candles, right? 14th February, 14:15. So entire thing it kept as a. So interesting. But let me draw only these two candles only. So this is 15 min HLQ demand zone. This is the high liquidity demand zone. This is inside 75 minutes high liquidity demand zone, and orders are picked up earlier from this zone. Because drop base again rally created, once again orders are picked up from there. And the next one is one more high liquidity zone. 4 rejections from this zone. Leg out with follow through is there. Violated opposing zone achievement. Leg out with follow through. And it is 12th February. $12.45 4 base candles. 12th February. Probably inside this 25 minutes. First let me check. 12th February, 12:45. Yeah. 12th February, 12:45. We have 1, 2, 3, 4 base candles. That means this entire 25 minutes, we need not draw. Entire 25 minutes is also a 15 minutes. 25 min, comma 15 min. It is supporting both time frames. And what else? So below we have low priority, high liquidity. You can draw these zones. At present, these are all the. Here we have the nearest normal demand zone, but high liquidity is we have here only. Only these two are high liquidity zones. That means definitely prices may come up to this area during this week. If this 5 minutes demand zone does not, mostly it has to be violated. It is a normal demand zone. It will happen, who knows, Monday with gap up prices may come down. And may pick up the orders from this 15 minutes high liquidity demand zone. That possibility is there. This 15 minutes demand zone is a normal demand zone. Now let us look into supply zones. We have immediate supply zone is a high liquidity supply zone, the 7th one in this list. This is on 13th. It is created on 13th March. 10:15 candle, 3 base candles. 13th March, 10:15. This is the one. 13th March, 10:15, and it is having 3 base candles. That means this entire 25 minutes high liquidity supply zone is also a 15 minute supply zone. This is 25 minutes / 15 minutes. Here we have 25 minutes, 15 minutes. But this is a high liquidity demand zone, right? Okay. And next, what else we have? We have high liquidity supply zones at 7th March, one base candle. 7th March, 10 o'clock. Okay, this is 7th March, 10 o'clock. So here, that means this entire 125 minutes high liquidity zone is again started from here. That means just above that institutions kept a trap. Actually, it is not trap. The reason is almost they are same. Slightly stop loss is adjusted because of this. So we have a rally based drop. See, it picked up the orders from here. Again picked up the orders from here. Now they created a zone by picking the orders from this zone. This is a 15 minutes high liquidity supply zone. It's very interesting. Institutions are making use of lower time frames, and they are creating higher time frame zones or even high liquidity zones. That way they are ensuring supply is very strong. Last week when we analyzed, we didn't see such kind of scenarios. But this week, institutions, they did everything what they are supposed to do. This is the one, and the last high liquidity supply zone is 15 minutes. That is on 5/1/9/15. 4 base candles. 5th January 9/15. So this is the one, 5th January 9/15. 1, 2, 3, 4. 4 base candles. A 10:30 candle is a leg out. That means this is exactly 25 minutes is also a 15 minutes zone. 25 minutes, comma 15 minutes. High liquidity supply zone. That's it. These are all the high liquidity supply zones from 15 minutes time frame. And the last time frame, 5 minutes, mostly our Monday's trades, they will be helpful to us. So let us change the time frame to 5 minutes and let us generate the chain. Based on this, now we can identify Monday's trading levels. So what is the nearest demand zone and supply zones? Let us find. Here 15th is the nearest supply zone, which is a high liquidity supply zone. And 17th is a low priority demand zone. Below that we have a high liquidity demand zone, and below that one more high liquidity demand zone. So let us look into these levels, because institutions created a lot of order flow, demand zones also. At the same time, supply zones also a lot of order flow here. So interesting ranges we will find now. So what we do, first let me draw the supply zones, the nearest supply zones, the 15th one. So 15/3/2024 9/15, 3 base candles. So let me change it to 5 minutes time frame. This is the nearest price. So 15 March 9/15 candle. After that 3 base candles. So here 15th March 9:15. After that, how many base candles? 3 base candles. Then drop candle. So this is the zone. See how perfectly from this zone picked up the orders and came down again. Again from this demand zone picked up the orders, again went up. See, multiple trading opportunities we got on Monday only between these high liquidity demand and supply zones. In between, normal supply zones are there. They are gone. Just like that, they are gone. But prices, this is the first test. It went there. And here, this is the first test. Went down. This is the second test. Again went up. That means on Friday, it has given you 2 buy opportunities. Actually, not 2, 3 buy opportunities. This is the first one. It reached. This is a short opportunity. Again reached the target. This is again long opportunity. It went up and again came back and moved up and reached the target. If anybody missed the second long opportunity, they would have got an opportunity here itself in this candle. See the rejection. On Thursday, if I would have generated this report, but not Thursday, because this zone is also created on Friday only. This high liquidity zone is created on Friday itself. But our software is not having live data at present. Only after market hours only it will identify this zone. So that means we would not have got these opportunities. If live data is available, if I can feed the live data in the software, it would have given the data, these live statistics in the market itself. It would have identified this as a high liquidity zone, and we would have got a trading opportunities here. Same thing happened to the demand zone also here. But here we are more interested on the shorts. The reason is because the shorts are enabled at this point of time. So this is a 5 minutes high liquidity supply zone, and this supply zone will be critical for this week trading, for Monday's trading or Tuesday's trading. Why I am saying, look into the trends here. Oh, now it is a sideways trend. 15 minutes trend is sideways. Okay, this is the 5 minutes. In case if this 5 minute supply zone is violated, in case let us assume demand is very strong on Monday, if this is violated, then what is the next thing? I have to draw, this is 5 minutes HLQ supply zone. Just assume if this supply zone is violated, then where we will get the support? The next 5 minutes, where it is? The 11th one. It is already tested 4 times, gave 6 rejections, and leg out with gap. But it doesn't have zone achievement. Even then it did the work, because high liquidity zones work like that only. So when it is created on 13th March, 11:30. After that 2 base candles. 13th March, 11:30. March. March 11:30. Okay, this is what is it is doing? 13th March 11:10. Sorry, 11:10. Sorry for my mistake. 13th March 11:10. Here, this is the leg candle. 2 base candles and 11.25 is the leg out. This is the leg out. It considered this as also base candle. Maybe this is a medium size leg candle. That is the way it considered. And combined both these candles. Actually, we can draw like this. But anyway, let us respect our software, because the algorithm works perfectly than our manual way of doing analysis. So where it is inside 75 minutes, 25 minutes or 15 minutes high liquidity zone. Inside we have this 15 minutes high liquidity zone. Sorry, 5 minutes high liquidity zone. This is the real order flow, 5 minutes. This entire thing is 15 inside 5 minutes. And this 5 minutes area, it picked up the orders. See here, even here also. See, it picked up the orders, came down. Again picked up the orders, came down. Again it picked up the orders, came down. Again, and now it moved even more further down. So that means it's just holding the prices, not letting the prices go inside. And not only that, institutions again created a zone, rally, base, drop. Again they created. Here also rally, base, drop. Not a great leg out, but trying to tell you how institutions keep on adding the orders here. All these zones indicates institutions keep on adding orders in this area. That means it is their favorite area. That is the way we have to understand. That means if this zone is violated, next it will pick up the orders from here. Now we can delete this 75 minutes normal zone, because for this 75 minutes, before that we have this high liquidity zone. This is a normal 75 minute zone. Now it is no more valid because it is nearest earlier. For reference we have drawn. Same way this 125 minute zone also we have drawn this for the reference purpose. But here this is the actual order flow. That way you can delete even this. Now you will get exact clarity from where we have the support and resistances. So next, anything else we have? Just above there is one more. This is a fresh high liquidity zone, not yet tested. We have leg out with high explosive. We have violated opposing zone achievement. When it is on 12th March, 10:30 candle, one base candle. So where is 12th March? Just above this. This is the 12th March 10:30. Is it 10:30? Yes, 12th March 10:30, one base candle. 12th March 10:40 is the leg out. So we identified this as a high liquidity zone. Software identified this as a high liquidity zone. This is a 5 minutes high liquidity zone. Good. See, now we are identifying the resistance levels now. But where is this? This is part of the daily zone, daily supply zone. Daily supply zone, institutions keep on adding so many order flows. That is what you have to understand. They don't want that daily zone should be violated easily. That's why there are several time frames, several places they added the order flows. So this is the one we have drawn. And above that there is one more high liquidity, that is 8th. This is already tested 3 times. So when it is, this is 7th March at 10:15, 4 base candles. 7th March 10:15. This is 14. This is the one at 10:15. 1, 2, 3, 4 base candles and again a drop. That is what it is there, right? That means this is exactly 15 minutes. That means 15 minutes and 5 minutes high liquidity zones are same. So that's why I'll specify 15 minutes comma or slash 5 min high liquidity zone. From here it picked up the orders earlier and created this 125 minutes high liquidity zone. And this one is pierced, this one is pierced, so we don't care about them, these zones. And we have another zone tested 10 times and 10 rejections from this area. This is a high liquidity zone. This is on 5th, January 5th, 10:15, 4 base candles. 5-1, 5th Jan. So here, this is a leg in 10:15. After that 1, 2, 3, 4. Already we identified this as a 25 minutes 15 high liquidity zone. So inside, this is the real order flow. Actually from this order flow only it picked up the orders. This is This is 5 minutes high liquidity supply zone. Zone confluence. The 5 minutes high liquidity zone is inside 25 minutes or 15 minutes high liquidity supply zone. Such kind of zones are even more powerful zones. A one high liquidity inside another high liquidity. See the push? How prices were down from this zone? Very fast. Throughout the day it was down till the last closing hour. Okay, this is about the supply zones. What about demand zones? Because they are very important for us. They are the support levels for us. Now we have drawn all the high liquidity zones, low priority high liquidity, TCO, SZ. Maybe you can draw this. You just note down these leg in dates, base and leg out and draw these zones in your charts. Now let me focus on the demand zones. Which is the nearest demand zone? The low priority demand zone, but this is the nearest one. Let us focus on this first. This is 15:3, 14:35. I think we have already drawn that. Fifteen minutes we have drawn. 15:3, 14:35. Hmm. 15th March, 14:35 candle. So this is the one, 1, 2, 3, 4 base candles. This is the one institutions created a zone like this. The demand zone 5 minutes. The risk is also could be very high for this zone. What is the risk for this zone? 0.28%. Anyway, I am not really considering this. Anyway, this is a low priority zone for time being, because this is the one picked up the orders from here. So what is the high liquidity zone? Here we have the high liquidity zone, 18th one. Already tested 3 times and 13 rejections. This is 15-3, 10-15. 5 base candles. Fifteen, 3, 10, 15. Yeah. We have a drop, 1, 2, 3, 4, 5 base candles. And this is the demand zone. 5 minutes demand zone. Inside this 5 minutes, 15 minutes demand zone is created. The orders 15 minutes is part of this. That means both 15 minutes and 5 minutes are overlapped with each other. This is 5 minutes high liquidity demand zone. Because you have such a risk, huge risk, you know what you can do? You can fine tune to type 3 proximal. Lowest body. See, the type 3, how risk is reduced? This is a type 1. Highest body, type 2, very little risk. Now go to type 3, lowest body. This is the lowest body. Perfectly it worked for type 3 proximal. That means order flow is in this area. The zone may look very big, but real order flow is there in this area. There is a reason, because here you see a long wick. The wicks might be having strong order flows inside the wicks, while prices are moving up. Wicks order flow, maybe if you go to 1 minute time frame, you will see some strong order flow in this area. See, every time it picked up the orders from here. See here, from here, from here, from here. Every time prices are coming, it is pushing up. And after that, this 15 minute zone, high liquidity zone is created. And from here, it is picking the orders. Okay, this is the, and next below there is one more high liquidity zone. That is the 29th February. 1520, one base candle. 29th February means somewhere here. $15.20. Earlier I told you the daily zone, it is holding the prices. There could be order flow here. That is what I told you earlier. Exactly, this is the one. Let me show you again where it picked up the orders earlier. We have a rally, base rally, 29th February 1520, 29th February 1520, one base candle. After that, 1st March 9:15. This is the one. This is a 5 minutes high liquidity demand zone. And from this high liquidity demand zone, it picked up the orders. See here, this entire order flow has come from here. Time being, let me delete, you will get clarity. I will add them again. See here, the entire order flow is, because in the beginning of the session I told you prices were moving from here. Finally, after reaching this daily demand zone, it is holding the prices. Because it is holding the prices, I told you there could be a lower time frame zone might be there, which is holding the prices. So this is the lower time frame, 5 minutes high liquidity zone is holded the prices here. How strongly it holded. Not only it holded, after that it created another LOTL 5 minute zone. See here, this is the LOTL 5 minute zone. From this LOTL 5 minutes zone, again 15 minute zone is created. This is the zone created. So that means within this daily 5 minutes zone, in this area, institutions kept the order flow, strong order flow. But is there any order flow below this? Because in case this demand zone is violated, then this entire 5 minutes demand zone will be violated. Is there any further order flow below this? Let us check in the 5 minutes. Because, if Monday, if supply is very strong, if institutions, easily these zones will violate. But this demand zone is having capacity. Anyway, already they build up the orders, institutions, with 5 minutes, this LOTL 5 minutes, already the existing 5 minutes, they are there to protect. Definitely they have a strong buy orders here. Let us assume if supply become even more than this, they will be violated. At the time below, if there are any orders are there, this demand zone will be holding. So let us check. Below there is another high liquidity. So 21 we have a high liquidity. Already gave one test. When it is? This is on 14th February, 14 hours candle. 14th February, 14 hours. So that means there are no high liquidity zones. 14th February is here. February, 14 hours. February, this is the 14 hours. Actually, this is a leg out. Why this is considered as a 14th February, 1410. This is 1410. This is leg candle. Maybe it is considered this as a leg candle. This is leg candle, but there could be something wrong. I need to check. But anyway, let me draw. This is the actual zone area. This is the demand zone. This is 5 minute demand zone. Okay, now the levels are clear now. Further below I am not drawing, because if this is violated, then probably we need to I need to plan another video. But these That means Monday these levels should hold, Monday and Tuesday. If these levels are violated, probably prices will be entering into weekly area. Okay, first what we do, let us identify the ranges for our Monday's trade. So this could be the range, because all these are all LOTL zones. What I will do, I will consider this entire thing is the range from here to here. This is the possible range for our Monday's trade or even Tuesday's trade. Suppose if one of these zones, this zone is violated. Let us assume if this 5-minute zone is violated, supply zone, then probably our range could be like this. This could be the range if this 5-minute supply zone is violated. Suppose this 5 minutes high liquidity, the bottom one, in LOTL, the last one is violated, then what happens? This entire daily demand zone might be violated easily, or institutions create a new high liquidity zone and then push the price up. That possibility is there. But at the time your range will be changed to this area. Let us assume this supply is holding and this is violated, then this could be the new range. If this 5 minutes is, let us assume this is holding, but this one is violated. If that is the case, this is going to be the target. I mean new range. Check here. We have seen 3 possibilities. This is the first possibility. Within these levels only prices will move in a narrow range. When it will happen? If this demand and this supply, if they are equal. Let us assume Monday Nifty is moving in a narrow range, or Tuesday also it is moving in a narrow range. Probably here only you will be having, how many points range will be there? This itself is a 550 points range. From this 5 minutes high liquidity supply zone to this 5 minutes supply zone, we have 555 points maximum range. If we say distal line to proximal line to proximal line, maybe it could be maybe 400 or something you may get, or 350. Only between these two. But this is, I have written distal line to distal line. If this supply zone is violated, we will have a range, a trading range of 998 points is enabled. Till the next. Suppose this supply is holding, but these demands are violated, the next range is having again 1370 points range will be there. Because at present inside the daily demand zone we didn't find any high liquidity zones. There are higher chances that institutions may create a new high liquidity zones inside this area. That possibility is also there. We cannot rule out any of these possibilities. But the ranges point of view, we have within this area, the price movement we can see during this week from here to here. But if any of these levels are broken, you have seen the next levels. This is the first level, this is the second, this is the third level, this is the fourth level. In one of these levels, you will get strong resistance. Similarly, demand, this is the first level, or this is the second level below. Actually, we can combine everything, because all these are all LOTL zones. This is the first level, this is the second level. and here this is the third level below this, because you can fine tune two normal demand zones where you can find the order flows, because these are all the high liquidity zones. Lower time frames there will be order flows will be there. It need not be every time 5 minutes should be a high liquidity zone. If you have a 75-minute zone, the normal 5-minute zones or 15 fine-tuned 5-minute zones, you can take trades like how we are taking trades in our high liquidity zones in everyday. In everyday analysis, I am explaining. Same concepts you can apply in these zones. So let us limit to this zone for the next your 2 days or 3 days trading point of view. So once you please focus on all these zones, you also should draw on the charts. If you just listen and if you are planning trades, there won't be any use. How I am drawing, please you try to practice. You draw the zones on your own, you get better clarity. So that in the live market, in a confident way, you can plan your trades. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.